So Lululemon had a terrible 2024. The stock was down 57% at the lows before bouncing back. And now that price was oversold. This year could be a much better year for the company. Recently, the company was upgraded by Needham to a buy based on a reacceleration of U.S. trends. And so with that said, we're going to get into the article, and then we'll get back into the technicals. All right. So Needham Company upgraded Lululemon to a buy rating from a hold, setting a 12-month price target of $475. We'll have to remember that number. The upgrade comes amid signs of reacceleration, U.S. sales trends, and expectations of positive catalysts in the near term. Their check suggests a strong recovery of demand in December, analysts noted, indicating that the brand's performance during the holiday season was robust. Needham sees upside potential to these numbers, especially with Lululemon's attendance at the upcoming ICR conference in Orlando, where a positive pre-announcement of Q4 earnings could occur. Despite some recent improvements in its share price, Lululemon stock remains below recent valuation levels. That's pretty good, offering room for multiple expansion if U.S. sales continues to accelerate, according to the firm. Now, the acceleration depends on whether we go into recession this year or not, where discretionary spending would subside, or on the continue Fed's interest rate cuts. However, some are saying that there will be no cuts this year based on inflation. Nevertheless, let's analyze the technicals. So you did have a trendline break. That could have been an opportunity for one to go long. You had, this is a subtle signal that I look for. 3, in this case, wicks on the bodies, followed by a green candle on the third one. That would have been an opportunity to get long as well. Multiple ways to have gotten long on this one. You do have resistance, support, another confluence. Let's go to the weekly chart. This was an ugly sell level, monthly sell level. Not the picture perfect formation, but you had a drop in price, basing candles in the drop. Becomes a flip zone. Sell level becomes a buy level. All right, let's go down to the daily chart. On earnings, price gaps higher, huge volume. This is an obvious daily buy. Obvious because everyone sees this gap, which needs to get filled at some point. Right now, price is basing. One can get long on a breakout. But if I scroll back out to the weekly chart, based on the last 52 weeks, price is now selling somewhat at a premium, retail prices. And so the upside is somewhat limited. The best reward to risk ratio would have been going long on some type of confluence. Nevertheless, the liquidity is at the $468 level. So I would anticipate price moving higher, finding that liquidity. And that's where the smart money would be offloading their shares as they got long down at 260. Thanks for watching. Subscribe, please. Like the video.